What's up everyone, it's Scotty with Money Vesting. So it is Inflation Friday and we are 8 minutes away from inflation numbers coming out for the month of May. So I'm going to quickly run through the expectations. I'll go over the consensus. We'll take a look at the market's reaction as well to those inflation numbers right at 8:30 a.m. Eastern. So in about 7 minutes, we're going to get those numbers. Once again, welcome on board everybody. Make sure that you drop a like and of course subscribe if you're new to the channel. So QQQ right now is slightly higher, so we're up a little bit over 28 basis points, so back over $300 after a brutal sell-off yesterday. The SPY is more or less flat, so just up over 9 basis points, and we've got the Dow Jones slightly lower, 2 basis points, and I've also got the 10-year yields here just so we can pay attention to that as well. With the yields slightly lower, 39 basis points, but still pretty elevated at well over 3% right now. Volatility at the moment, so VIX is slightly higher, so 1.7%, 1.5%, so we're back over 26 levels. Yesterday, obviously, we got a big spike in the VIX, jumping over 8.8% as the markets were selling off pretty aggressively yesterday. And oil prices, again, remain elevated. We've got Brent trading well over 124, crude trading at well over 122, and they're both up close to 1%, with Bitcoin and Ethereum kind of muted, not really moving all that much ahead of the CPI report here. So it should be exciting. So let's just go over the estimates here very quickly, and we'll take a look at what those numbers are going to be potentially. So this is the April's month-over-month increase. That was the month-over-month 0.3%. And of course, in March, we saw a pretty big gain of 1.2%. And currently, we are sitting at 8.3% for the total headline CPI. And for core, we're sitting at 6.2% right now. So this is going to be the consensus right now going into this CPI report. So consensus is 0.7% increase month over month and year over year to stay pretty elevated and stay steady at 8.2%, slightly coming down from 8.3. And when you exclude food and energy, so when you strip out food and energy month over month to increase 0.5%, and year over year for us to come down under 6%, so 5.9% is going to be that increase for core CPI when you strip out of food and energy. So this is going to be the Fed funds futures and the probability for rate hikes going into the next couple meetings. Next Wednesday is when we have the FOMC meeting. That is going to be June 15th, and there is a 94% probability right now that we are going to see at least a 50 basis point hike, going from 75 basis points to about 125 to 150 basis points. The worst thing for the markets can be if those expectations go from 50 to 75 basis point hike going into next Wednesday if this inflation report is super aggressive and really, really hot. We'll talk about that more in detail, and I'll go over this later in the video as well. So economists surveyed by Dow Jones expect May consumer price index to show an 8.3% year-over-year increase. So again, 8.2, 8.3% around those levels, and the same as April. And year-over-year inflation reached a high of 8.5% in March. And the Federal Reserve is expected to raise interest rates by 0.5 point next week and another 0.5 point in July. But after that, the pace to fight our 4-decade high inflation is less clear. So we don't know what's going to happen in September and onwards. And bond yields have been rising and the stock market has been falling on the concern that the Fed's approach to tightening will have to get even more aggressive to obviously stabilize prices and abate these price pressures, risking putting the economy into a recession as well. So let me know in the comments if you guys can actually hear this. As soon as this sort of starts, let me know if you guys can hear this, and we'll play this very shortly. We've got about 3.5 minutes till inflation numbers come out, and yeah, it should be very exciting. Stocks overall have been, very much back and forth with Nvidia here. Let's take a quick look on how individual stocks are trading. So Nvidia is slightly higher, more or less flat. Everybody just anticipating what those numbers are going to be. And then we've got Google over here, slightly higher. We got Tesla up over 60 basis points. Amazon is slightly up over 30. And Meta Platforms is also up close to 1%. And Apple here is slightly up over 40 basis points. So far, not a lot of movement, just a lot of consolidation here for the markets overall. So let me know if you guys can hear this.
Furman, former Council of Economic Advisors Chairman under President Obama and a professor at Harvard's Kennedy School of Government. Fresh Pond, Jason, right? And I did a little look.
I'll be there tomorrow, Joe.
Well, yeah, I try to figure out exactly where you're coming from. The stint with Joe Stiglitz, but then a major stint with Larry Summers. So I'm trying to put all those economic policy studies director at the American Enterprise Institute.
So perfect. We'll keep it on here. We got about, 2.5 minutes left? 2 minutes pretty much for the CPI numbers to come in. And let me know. Let me know what you guys think about where CPI is going to be, where inflation is going to be right now.
For inflation, what has been more the cause? Do you ascribe any causation to fiscal policy, the American Rescue Plan, or do you really put more of the blame on the Fed being late to the game in terms of taking away some accommodation?
You know, Joe, it's all of the above, and I'd add President Putin, too. That's a real factor. The rescue plan was too large. The Fed stuck with its expansionary policy for way too long. The data for them was even clearer than it had been for the administration. And then we take that and add on top of it some really bad luck from the rest of the world, and all that's combining together.
Michael, any disagreement with that? You can agree with Jason. We don't always try to get you guys to argue.
I want to amplify. If you look at 2021, I think the American Rescue Plan was responsible for about 3 percentage points of the inflation we had in 2021. If you look at the Fed, I think it was very hard to justify the Fed's decision to continue purchasing mortgage-backed securities at a time when home prices were growing at 20% year over year. We would have had a lot of inflation if it weren't for the invasion in Ukraine. Of course, the invasion of Ukraine has exacerbated that problem as well. So we're getting hit with a perfect storm.
Mona and Kathy, you can split a minute. So Mona, why don't you start 30 seconds?
Yeah, I think this is going to be a tale of two numbers, headline and core. And headline, we're seeing continuing pressure upwards. WTI, for example, is up 7% in the month of May, another 7% in the month of June alone. Core, however, we're starting to see signs, glimmers of hope, better lumber pricing, better used car pricing, perhaps some slowdown in housing, perhaps some wage pressures releasing as well. So we'll be watching for that differential.
Exactly 30 seconds. And Kathy, I'm sorry you're last because Kathy B ought to be, Cardi B would, can we call you Kathy B? It's close. Anyway,
Kathy B is fine.
Give me 20 seconds.
That's fine, Joe. Just, I agree with all the, previous mentioned comments, just would add supply chains, right? The disruptions there are really played a large role, and they still play a large role in growth and also inflation.
Okay. All right, Rick, it is now time. Sorry I didn't get to you, Rick, but you have plenty of time after you give us the numbers for May CPI.
Yes, we are awaiting the May CPI, and 1% on the headline number, up 1%. That's definitely hotter than the 0.75% we were looking for. The high water mark there was up 1.2 in March, so we're close. And that 1.2 was a 17-year high going back to 2005. Strip out the all-important food and energy, it's still hotter than expectations, up 0.6%. It equals our look in last month, and to put a face on it, the high water mark here was all the way back in April of last year, up 0.9. That was a 4-decade high. But remember, both these are hotter than expected. Year over year, these are the Moneyball numbers. Year over year headline, 8.6, a new cycle high, usurping March, which was 8.5. That was the highest since 1981. Now 8.6 continues to be the highest since 81 because the comp there is 8.9 to 11.8%. And if we look at year over year core, also hotter than expectations, up 6%, following 6.2%. High water mark there, 6.5, and that was in March, and that was the highest since 1982. But remember, even at 6%, it coming down from the high water mark of 6.5, that standalone is still the highest since 1982. So these are super stubborn numbers. And our panel, our esteemed panel, has lots of brain power there, and they go in lots of categories, Joe, as to why inflation's here, the all of the above mentioned. I will say that out of all the above, energy. And there's so many comments here about, the administration could only do so much. You know what? We all said that about the Fed. And then there's this thing called forward guidance. So the Fed gets the market to do things long before it takes action by telling them what's in their head, what lies down the road. What was the forward guidance with this administration on energy? We know the answer. Maybe they can't get things to happen faster, but by giving positive forward guidance, by not closing pipelines, by not talking pre-election about how much they don't like fossil fuel, maybe things would have turned out a bit different. Joe?
Thanks, Rick. We're going to get right to our panel, but I don't think we've talked to Mike yet. I know I'm taking a risk going from Santelli to Santoli, even for me to get it right. But Mike, the reaction in the market has been swift, stock market.
You nailed it on the name. Yeah, it has. And now, look, as I said earlier, we were bracing for something that had the potential to be an unfriendly number, and we got it. Just for context, the S&P 500, we were at 100% below yesterday's close, was the closing low. It seems like the market wants to test that range. I guess you'd have to say the peak inflation number, it remains plausible, the peak inflation notion, but maybe not persuasive. It's very difficult. And if you think back, May 2022 was when the math was supposed to start working in your favor on the annual number, because May 2021 was actually kind of a hot CPI. So that clearly is not the case. And it basically just means, the Fed sees zero opening to lighten up on its rhetoric and on its plans for half-point increases in the next few months.
All right, go back to you where we started, Jason, and then I want to ask you a theoretical question, but just comment on.
Wow. So 1% increase month over month on the headline CPI, core increasing by 0.6%. So the total headline now is at 8.6, much higher, pretty much the highest level we've seen in a very long time, and core. So, that was one of the things that I think we talked about yesterday, right? And you can start to see a little bit of a divergence, right? You can see that divergence in this chart. And if you go back to the couple streams and, yesterday in my market video, I mentioned that core CPI, that's the one that may show some signs of improvement, right? Sure, month over month, we saw 0.6% increase for core, but it actually came down on a year-over-year basis. But total CPI, when you put pressures on with energy and food prices still going higher, now we're starting to see a little bit of a divergence, right? So if you simply take a screenshot of this, you can see how this thing is moving higher and this one is actually moving lower, right? So you're seeing this gap kind of widening out. And that's all because energy is obviously putting so much pressure on the overall headline CPI, and core is starting to come down a little bit, which is a good thing, but we want to see overall headline CPI to also come down. Now, when it comes to specific line items, again, this is actually the chart from up until April. So this doesn't include the recent report that we just got. So it doesn't include the May numbers, but I just want to go over specific line items, which we did see a little bit of improvement in. And then this report, once again, was not great for those line items. So food is up 10.8% on a year-over-year basis, food at home, right? And in the month of April, from March going into April, it was up 1%. Cereals, bakery products, meats, poultry, fish, and eggs, we've talked about them as well. They're up, 10%, 14% year-over-year. And they all saw at least a 1% gain month over month. And dairy-related products, they were up 2.5% month over month. And non-alcoholic beverages, they were up 2% month over month. But energy actually contracted back, right? So month over month, it was actually down 2.7%, 5.4%. Motor fuel, gasoline, they were down 5.8% and 6.1%. Well, if you go over to the report that we just got, you'll notice, so if you come all the way down here, you'll notice that gasoline, all types, was up another 4% on the month. Motor fuel, all the way over here, was up over 4%. And check this out, fuel oil, up 16%. Almost 17% in 1 month. Month over month, fuel oil was up close to 17%. Just an insane amount of increase. And now year over year, this number is up 106%. 106%. Like it's more than doubled from same time last year. Fuel oil. Just an insane 50% for energy commodities. We've got 49% for motor fuel, and then gasoline's up 48%. Utility, gas services up 30% on a year-over-year basis, and up 8% 8% month over month. So, it's obviously putting a lot of pressure on headline CPI. Headline CPI was no doubt one of the worst numbers. 1% is a lot, right? That's the 1%. And all items less food and energy was up 0.6%. But if we come over to airline fares, again, another thing that we were paying attention to, so you've come down on this report, I've highlighted the airline fares specifically because that was a big pain point for core CPI, right? And airline fares obviously do get affected because one of their biggest cost is gasoline and oil. So if those go up, airline fares also go up, and then summer is also here, so people travel more. And last month, this thing was up 18%, 18.6%. Year over year, this thing is already up 33%. And in the most recent report, now it was up 12.6%. So another double-digit move to the upside on a month-over-month basis. And year over year, this thing is up over 37%. So kind of like the same culprits. Overall, we've got airline fares pushing higher, used cars, new cars, vehicles, like all those things, very subdued. We're not seeing much of a gain there, so only 1.8, 1%, 0.5%, nothing to write home about. But airline fares getting affected by energy, utility pipe up 8%, gasoline up close to 17%. Month over month, and then food also pushing higher. Dairy products specifically up 2.9%, 11.8% on a year-over-year basis. And then there was a few more things. Let's just take a look at, so apparel we already went over, new vehicles, used cars. Tobacco was another thing that's, up a little bit over 7.2%. So I don't know if it's going to be available here on this report. So there we go. Tobacco is up 7.9, was up close to 1%. Not a big deal there. But overall, I think it was over the total CPI that just really hit the markets with very strong negative catalyst. With the QQQ now down 1.4% and the SPY down over 1%. But it's really important to remember that the divergence is still playing out. We're seeing a lot of that pressure come in because of energy prices. And that's more of a supply shock to the markets than anything else, because refineries are at capacity and Russia's oil getting out of the supply, global supply, is putting a lot of pressure in energy prices. And, that's something that we talked about. Core CPI showing some signs of improvement, total CPI not so much, and that's the divergence that we're seeing, unfortunately, in the overall market. So, oil prices still pretty elevated, and if they continue to stay elevated, that's going to be a problem for energy overall. I mean, we're just hitting close to $5 a gallon in gasoline, so this was something that we were anticipating. Nothing, no surprises. The only thing is that total CPI, nobody expected it to be jumping over 1% month over month. So that's close to 12% on a year-over-year basis if you analyze that number. So that was a pretty hefty gain here. And we got the markets once again selling off right back down. Individual stocks, obviously Apple's down close to 1.11%. We got Meta Platforms down over 1%. Amazon's down over 1.24%. Tesla's down close to 2%, and Google also is down 1.14%. Now, the bigger question becomes, what is the Fed going to do, right? Inflation's out of the bag. We already know where inflation is now. What is the Fed going to do, right? That's a bigger question. And if you look at the actual CME Fed tool, there's about a 94% probability already that we're going to see rate hikes in June, close to 50 basis points. And then in July meeting, another 50 basis points. In September, possibly another 50 basis points, 61%. Right now, that's a little bit unclear that what happens in September and onwards. So the question now becomes, how aggressive is the Fed going to be? We know interest rate hikes are going to coming in June, July. We know that 50 basis points at least is a minimum, is what we're going to see. But how aggressive is the Fed going to be next week? And what their guidance looks like, because they're also expected to announce a summary of economic projections. So SEP is also going to be announced in that meeting. So that report is going to come out, give us some more guidance on inflation, interest rates, and GDP and unemployment as well. So those four categories they're going to project out for the remainder of 2022. So that's where we are. Not the best report. Month over month, we're still seeing a pretty substantial increase in a lot of line items, specifically energy related. And everything else seems to kind of be cooling off a little bit. So when it comes to apparel, new cars, used cars, medical care services, alcoholic beverages, even rents, shelter was up 0.6%. So that's, pretty modest gain, not a whole lot, nothing crazy. Shelter prices, rents, primary residence up 5.2% year over year. So Not anything substantial, but airline fares definitely putting a lot of pressure on core CPI. Motor vehicle insurance, all those things only at 4 or 5%. Transportation services, obviously, up close to 8%. So yeah, not the best report, definitely. But core CPI and that total CPI divergence is something to pay attention to, because now I think it's getting very, very clear why we're seeing total CPI much hotter than core. The only thing that got cheaper are the stocks. That's right. The only thing that is getting cheaper right now are the equity prices, but everything else is getting way more expensive. So I don't think we need to do a poll today, but might as well just continue with this ritual and see what everybody has to say. So markets today, red or green. So make sure that you vote, and it'd be exciting to see what everybody's expectations are related to the markets today, whether we're going to close red or green, and if there's any buyers present for after today's report. So the yields here, so now they're starting to drop down a little bit. So we're down over 1.25%. Volatility, look at that spike back over 27. So it's up over 3.6%. So that's obviously pushing higher with the 10-year yields, just over 3%. And oil prices, let's take a look at cryptos. So Bitcoin just down about 1.2%. So nothing crazy. And Ethereum is also just trading at over 1,700, down about 2.4% right now, just trading at support at close to 1,1800. So yeah, so that's the inflation report. So Ranjit says oil is the only culprit, major contribution for inflation now, and money printing and Russia war, indirect fight with economy. Yeah, so I think oil obviously is or has been the biggest reason as to why we're seeing total headline CPI and even core putting pressure on transportation services and airline fares. As a result, we're seeing a lot of upwards pressure, and it's stickier than what most anticipated, right? Oil prices definitely are very, very sticky right now, with gasoline and energy prices staying pretty aggressively high. And that was also covered in our other video where I mentioned that the oil crisis is getting worse because the demand is nowhere near close to peaking or stopping, and supply shock is still pretty relevant in this environment, and as a result, energy prices is staying very, very elevated. And 147, 150 obviously is going to be that all-time high for oil. So we'll see if we actually, I think at this point it's very likely that we will probably see energy get tested at roughly around 140s, 150s. I think that's something that is definitely on the table. That would be another 19-20% jump, and given how this geopolitical tension transpires over the next couple of quarters. But I think it's a very very probable that we see 147, 150 levels on the energy front as more and more sanctions come through for Russia, and we're still on the supply standpoint. We're nowhere near close to supplying enough to keep up with demand. So let's see here. All right, so let's just go over with the comments. So it's all because of the red mic. Yeah, where is the green mic? We need it after doing some shopping. Yes, so trust me, it is coming. I want to bring it out at the perfect time. And I also mentioned that in the future I'm gonna probably switch it between the red and the green mic. Red when I do think that things are getting frothy and things are getting out of hand, valuations are very, very high, and green when I think that it is just a absolute buying opportunity and you just want to dollar cost averaging in this market. So Black Friday it is. Yep. So there's definitely going to be a lot of deals, a lot of sales for a lot of individual companies. Tesla's back to just over 700. Amazon is now at 114. So yesterday it had a pretty brutal day, down another 1.3%. And Meta Platforms here down close to 1%. Sold off pretty aggressively yesterday, 6.4%. And Nvidia is also down close to 3% now, trading as low as 175. So, yeah. All right, let me know if there's any questions about individual companies. I'm happy to go over them for you guys. Goldman Sachs downgraded Netflix and Roblox to sell. Let's see how Netflix is doing. By the way, DocuSign reported their earnings and they are getting destroyed pre-market. Netflix is down close to 5%, trading as low as 183. So if we do come down to in the 150s, I think that's my fair value for Netflix. But let's just go over this presentation. Let me just go over that very quickly. So the national average price per gallon of gas, according to AAA, keeps inching higher, now just 1 cent shy of $5 as oil prices continue to head higher. And WTI, rose Friday, trading at more than $122 a barrel. So those gains, however, capped as the traders worried that new lockdown measures in Shanghai for mass COVID testing might outweigh solid oil and gas consumption for the world's top consumer, the United States. But for the time being, peak summer driving demand in the U.S. was boosting crude prices, of course. So 2 stay-at-home stocks getting crushed on signals of business weakness. So we got Stitch Fix, apparently is down over 10.5%. Last time I checked, it was down 16%. And DocuSign also is down close to 20+% right now. So Geomission, caddy inflation in India. Yeah, so inflation in India is also pretty bad, and RBI also raised their interest rates yesterday. Interest rates historically have been very high in India, but yeah, inflation obviously over here also not very good, with prices for most consumer items running at a multi-year, if not multi-decade highs. DocuSign sank 25% pre-market. The electronic signature software vendor weaker than expected. That's 3 for 3 for DocuSign. 3 earnings, and all 3 times the stocks dropped 25+%. For its fiscal first quarter, overshadowed revenue beat, and Stitch Fix plummeted roughly 14% in before the bell trading. The online personalized styling platform confirmed planned layoffs of 15% of salaried positions within its workforce as it's reported disappointing quarterly results and warned about the current quarter. So another company reporting some type of layoffs, and this is something that we have also talked about, and this is just one of our concerns about the overall economy as well, the state of the unemployment rate, which is a bright spot for the markets right now, but for not super long. I don't think it's going to be that. I don't think that's going to be the case for super long, given how many layoffs and hiring freezes that we're going through in the overall market. So again, DocuSign and Stitch Fix, we can take a look at them in more detail. This right here is another private video that I posted for all of our members. So this is our new option strategy. So if you are interested in trading options, we've already talked about 3 strategies when it comes to cash secured puts, covered calls, and leaps. And this is our 4th strategy that I introduced to everybody. So that's a private video that you can access and watch as well at your free time. And of course, if you have any questions, feel free to reach out. I'm always available and happy to answer any questions about specific strikes, expiration, your trade plan when it comes to if there's any stocks you're looking at. I can also share some ideas as to how I would go about that potential trade opportunities. So the link's obviously going to be down in the description there. All right. Yes. So Puneet, I will do that right away. The main chart is going to be set to daily. There we go. And I'm just going to save that. So if you refresh that chart now on your trading view, it should reflect the 1-year chart on the daily time frame. So we got about 40 minutes left for the markets to open, and there is still no signs of any strength in the overall market. We're still having the QQQs or the NASDAQ ETF down 1.5, SPY is down 1.26, and the 10-year yield is down about 36 basis points with the SPY down about 1%. All right. Let me know if there's any individual companies you want me to go over. I'm happy to go over that as well. How is the market there crashing? So, well, we're definitely pulling back quite a bit. So if you take a look at the S&P 500 overall, we still have 3,800 level that is going to be important. So the expected open today is going to be around under 4,000. So 3,975 is where we are probably going to open today. I want to say 3,950. Call it 3,950. I think that's where we're going to open. And 3,800, that's the fib level that we need to watch. That's a very, very important level at 0.382 fib level for the S&P 500. And for the NASDAQ, of course, 11,000 is a level to watch. That is very, very important. And today's open, given that we are down pre-market close to 2%, we're probably going to open at around 11,500. So 11K is going to be very important for the markets right now. Okay, so let's take a look at advanced micro devices. So AMD pre-market kind of holding pretty steady here, only down about 65 basis points, down about trading as low as $98, and still trading inside this downtrend, right? So we haven't really broken outside of this downtrend yet, still making lower highs and lower lows. So resistance stays put at close to 102, support at close to $83, $84. I'm definitely thinking about maybe selling some cash secured puts if this selling pressure continues for advanced micro devices to kind of accumulate more shares as it continues to sell off, and try to get cost basis down to under 80 or closer to 75 or closer to $70. Anything inside this range, a cost basis inside this range, in my view, would be very, very attractive for advanced micro devices over the long term. Let's take a look at NVIDIA, then we'll talk about PayPal. So NVIDIA here, down 3%, so a lot more than Advanced Micro Devices here. So NVIDIA down to 174. Next support is going to be around here, inside this sort of green rectangle, call it 150s, is going to be that level to watch. Of course, my fair value is going to be sitting roughly in the 120s. Haven't really been super aggressive with NVIDIA, and that's for a reason, because valuation multiples remain a little bit rich for NVIDIA, which is why patiently waiting for NVIDIA to either come down to 150s or 120s for me to be, moderately aggressive to super aggressive at those levels. But of course, resistance at 195, close to 200, and that's going to be the level to watch right now for NVIDIA stock at the moment. All right, let's take a look at PayPal. PayPal here is down close to 2%. So again, continuing on that momentum from yesterday. Yesterday was down close to 4%, trading at just over $84. And resistance stays put at close to $93.50 for PayPal, and support level all the way down to $71. So this right here is going to be that level to watch. Fintechs have been under tremendous pressure right now because, well, for one, we're seeing the consumer spending kind of slow down a little bit. And if there's any expectations of a recession, which the likelihood of having a recession is going higher and higher and higher, then, obviously people spend less. Liquidity kind of goes away from the economy overall. And as a result, the total payment volume, gross merchandise volume for fintech companies starts to slow down. And the take rate, which is how much they make off of that TPV, obviously results in lower revenues for the company. So that's a big headwind for not just fintech companies, but for also traditional banks, because if the economy goes into a recession and, we're already starting to see those early signs from mortgage applications, and real estate prices are still pretty elevated, but over time they could start to pull back a little bit, and that's going to lead to lower and lower activity, lower volumes in terms of how many loans these traditional banks underwrite. And as a result, they've also been under pressure, right? So JP Morgan, Bank of America, Wells Fargo, you look at all these banks, they've been selling off as well. So fintech is kind of like in that very similar situation where spending could slow down, and as a result, the total payment volume for PayPal, for SoFi, for Affirm, for Square actually had a pretty brutal day yesterday, right? It's down close to 10%. It's down another 3% pre-market. And right now, the support is at $74, $75. So that right there is going to be that level to watch. If we continue to see more weakness and breakdown, then unfortunately $56 is going to be that next potential area of support for Square. A lot of these names, that we're going over, obviously, if it's not energy, everything else has a very strong downtrend. Energy is the only sector that has a very nice consistent uptrend, right? So if you take a look at ExxonMobil, Chevron, they're flat, right? They're not moving down as much. It's only down 9 basis points. So if it's not energy, almost everything has a strong downtrend, right? So you look at ExxonMobil, very, very nice consistent uptrend. We've just been making higher highs and higher lows. This is the pattern overall. But if you look at something like AMD, it's the exact opposite, right? It's like looking into a mirror and you've got something like lower highs and lower lows. So it's pretty obvious, because of this overall weakness in individual stocks. You look at AMD, Nvidia, Apple, Tesla, Microsoft, Google, the list goes on and on and on, and not just tech, but a lot of other sectors. If those stocks keep making these lower lows, then unfortunately there's not going to be enough momentum for indices to push higher, regardless of how much energy goes up, because energy makes up a very, very small portion of the S&P 500 and NASDAQ, like less than 5% of that is, energy sector. But it works the other way, right? It works the other way. If technology is the only sector that continues to push higher and all other 10 sectors go down, the market still can find a way to go higher, because technology is such a big component of the overall indices. But if technology doesn't perform, unfortunately, the overall market is not going to be able to go higher, despite how well energy does. Despite the fact that energy is up 60+%, it's not going to be enough for the overall indices to find any type of momentum here. All right, let's see. So Alex Caddy, among all the fintechs, which one is the most solid and good buying at this moment? Well, if you're looking at it from the entire perspective of the company that has the best balance sheet, best valuation multiples, the more established, and the one that has very good potential for the future, then I would have to go with PayPal. And Square's also, the block is also really good. But the only problem is, of course, their margins, right? Because of Bitcoin revenues, their margins are really, really low. And the valuation multiples, unfortunately, are really high. Price to sales is low because, Bitcoin makes up majority of their revenue. And that's, as a result, price to sales multiple is really cheap for Square if you look at it on the surface. but how much of that revenue trickles down to the bottom line as profit, those margins are really, really low. And as a result, their price to earnings becomes quite high compared to PayPal, which is, now trading at roughly 20, 22 times earnings on a forward basis. Affirm, SoFi, some of those other companies, those are great, but those are more trading on the qualitative aspect. Quantitative analysis wise, when it comes to actually having strong, consistent, mature financials, those companies do lack that. Unfortunately, this is the market environment where you want to look for strong positive free cash flow, strong earnings growth, and strong balance sheets, companies that can survive through this recession and come out stronger on the other side. So that's my 2 cents on PayPal. So let's take a look at Upstart. So Upstart, I've exited my entire position. I exited yesterday. Closed out both my covered call and my equity position. So on covered call, we were able to lock in over 60+% profit. And on the equity position, we were able to lock in over 25% profit. And if it does sell off, continues to sell off sub 35, sub $30, well, I would be very interested in taking another trade at this. We've traded it like 3 to 4 times in the past. Upstart's been so volatile. So I really like this stock from a trading perspective because it's really volatile, and volatility is your friend if you're trading any particular stock or index or whatever. So it is really volatile. Premiums are really good for Upstart. So, right now it's down 3.5%. If it sells off sub 35 or closer to $30, then, I would look at the premiums. I would look at cash secured puts and maybe even taking an equity position and then selling covered calls against that. A few months out, or maybe even January out, depending on the premiums and the returns and all that stuff. So I'll keep you guys updated on our Discord if I do decide to take another trade at this. All right, let's take a look at ZIM. So what is going on with that stock? We've talked about ZIM a couple times. I've done a couple videos on that stock as well. Yesterday it was down 9%. The day before that it was down 14%, and right now it's down 2.2%. Now, I understand ZIM was one of the very, very attractive stocks because of the dividend yield and a very strong momentum. But I've mentioned this before, that this growth is not sustainable. Eventually, the company is going to start decelerating in growth because of how spot rates have gone up, right? Because of supply chain issues, the spot rates have really gone up pretty aggressively to the upside. And as a result, the revenue went up 3 times. And the earnings went up 10 times, right? So both of those numbers were very strong. But, when you start looking into the future, 2023 onwards, then is the company going to be able to grow earnings by that rate? And if the answer is no, then you want to be cautious with that stock, right? And yes, the dividend yield is the one that's really, really attractive, 56%, but there's always a catch, right? The markets, there's no free money here in the markets, and 56% dividend yield, you have to ask yourself, what am I missing, right? What is it I'm missing about this stock? And it all comes down to the earnings, right? They pay a portion of their earnings out as dividends, and at the same time, their earnings have grown so much because of higher spot rates. But if that stops in the future, if spot rates start to kind of stabilize and pull back down, then of course, their PE multiple is not going to be as low as what we have seen before. So right now, I would keep a close eye at this support, roughly in the $47 to $48 range. See if it actually does come down to test those levels. Previous resistance, support here, and 2 consecutive red days obviously has been very brutal for ZIM, but would not be surprised to see support at close to about $40. Had a dream last night that Google is $67. Well, probably after the split is that dream, because right now if Google goes down to $67, I don't think we are I don't think there's anything left. Let's just put it that way. And I know that sounds really, really messed up, but if Google from these levels drops down to $67, I don't even want to imagine what type of market we would be in if Google is at 67. I'm pretty sure that dream involved at least some stock split, so that will happen after June. Actually, so the stock split for Google is going to be after July 18th. And after the stock split, well, Google is going to be trading at about $112. And even from $112, it would be a pretty brutal market if it were to drop down to $67, right? So 112 down to 67. We would be going down another 40%, which it's not really unlikely. It's a very much a possibility for Google to drop down from $112 to $67, but that would be a 40% drop, and of course in that environment, the entire NASDAQ would be down like at least 30 to 40% from its all-time highs if individual stocks are dropping, especially some of the large cap tech stocks are going down like 40-50%. So I don't know, I've heard this superstition that if you actually dream something and you remember it, then it doesn't have, I don't know, correct me if I'm wrong, but I've read or I've heard something that if you dream something towards the morning and if you remember it, it doesn't happen. I don't know. Something about that I've heard, like a superstition. I could be, obviously, I don't know what I'm talking about when it comes to dreams, but I've heard something very similar to that it doesn't happen or it's not true if you kind of dream it and remember it at the same time. But anyway, enough about that. Let's just take a look at Alibaba. So Alibaba here is up over 2.6%. So any dreams about Tesla? I'm sure people have had dreams about Tesla before, so funny, that's a great line. That is a great line. I'm not superstitious, but I'm a little stitious. I'm sure people can understand the reference there. That's one of the greatest shows ever created. But 123 is a resistance for Alibaba, right? So we've talked about this before and in our yesterday's live stream as well. This right here is going to be that resistance that we're working with for Alibaba. We've gotten rejected at that level a couple of times. Previously gotten rejected a couple of times here. This right here from March 2022. And right now we're just, testing that resistance again in the 120s. So very nice breakout to the upside from this lower high for Alibaba. But like I said, resistance stays put at 123. So Chinese stocks actually doing much better pre-market than their US counterparts. NIO's only down or pretty much flat here right now. Alibaba's up 2%, a little bit over 2%. And then let's take a look at JD.com. It's up 2.4%, so a very nice move. And Baidu is also up over 2.4%. So Chinese stocks are really pushing higher here, pre-market up over 2.4% each. So let's take a look at the markets. QQQ is still down 1.5%. We've got the SPY down 1.29%, and the Dow Jones is down over 1.16%, with the yields pretty much flat on the day, just over 3%, and volatility is getting steam. So we're up over 5% on the VIX, and it's up back up to 27.4. So let's take a look at Mara as well. I sold covered calls against Mara, and they do expire, quite a few months out. So it's down another 4.83%. So those covered calls, again, are a great hedge against your equity position. So if the stock drops, which it has been dropping, your covered calls are actually, getting further out of the money. So you're able to obviously make a profit on those. So you're playing both sides that way. So Mara, if it continues to pull back, we'll sell even more covered calls, lower the cost basis. And then right now, obviously with Bitcoin and Ethereum, none of the miners have been doing too well. Coinbase is down. It was down over 7.8% yesterday. It's down another 5.6% today. Riot was down over 8% yesterday. It's down another 3% today. CleanSpark down over 6% yesterday, down another 4% today. So miners absolutely getting destroyed here, with Bitcoin just not catching any bids and not able to find any momentum to the upside and just trading sideways for the most part. So yeah, Mara's like dropping 10% daily, and that's the case with all miners, right? So you've got Riot, CleanSpark, Coinbase, the Bitcoin Trust ETF, all of them just dropping 6, 7, 8, 9, 10%. So it's just been a really, really volatile sector overall for cryptos. So I sold a covered calls at 75 yesterday on CRISPR. Now it's 68. What a stock. Let's take a look. So CRISPR here is down 4%. That's great. That's really good. That's great timing, Christopher, by the way. And we were talking about this resistance, right? So I think I mentioned this in our previous live stream, I think yesterday's live stream. So we were testing that resistance coming in from May 2018, and this right here coming in from December 2019. So a couple times we got rejected here for CRISPR, and today we're down 4.4%. So those covered calls are gonna obviously print. So that's great for CRISPR. And And yeah, very nice strong move for the company from $42, rallied 75%. RSI and MACD got overbought. I think, you know, in this market, it's very rare to see an RSI and a MACD getting up to overbought levels. It's like finding gold in this market. If you find an RSI or MACD like overbought, you know, your eyes just like open up really wide. I'm like, what? This stock is up? Wow. Like, this is crazy, because this entire market, you'll find, you know, more than 75% of stocks just absolutely destroyed in this environment. So, all right, we've got about what, 25 minutes, 23 minutes till market opens here. So Square, Puneet, we can do some analysis. Thomas says, I'm late to the party, guys. How bad was the CPI? Let's just not talk about it that bad. I don't think we want to revisit the CPI numbers. I don't think anybody wants to. So, yeah, that's that's where we are. But yeah, total CPI increased 1% overall. And year over year, we're at 8.6%, but core jumped 0.6%, and it's now at 6% year over year. So we saw a little bit of divergence from total CPI going higher, core CPI coming down. So that divergence is playing out, meaning that they are going in different directions, and as a result, energy is obviously putting a lot of pressure on total CPI and even core to some extent, because transportation services, airline fares are really, really high. I don't know. For people who are traveling, you know, domestically and internationally within the U.S. and in North America, are like airline fares that much higher from 1 month ago or a few months ago? You know, if you have experiences with that, just, you know, feel free to share. We already know gas prices are higher and people are, dealing with those. But I'm interested to learn more about airline fares and if that's actually playing a bigger role to core CPI, because, you know, according to the data, that's up 37% year over year. Like I'm trying to book flights for when I'm gonna be in the U.S. this October, so they haven't really changed all that much from a few months ago. They have been pretty consistent, like for the domestic flights that I'm booking. But I don't know, maybe different routes, different airlines are offering different prices. Markets have been disastrous, but your live streams are really fun. Thank you. Appreciate that. And that's what it's all about. You know, the markets, we've talked about this before. It's not always going to be, sunshine and rainbows, meaning that it's not going to be great. It's not going to be markets pushing higher and greenery every single day or every single week and month. This is what a real bear market looks like. This is what, real stock market declines look like in the markets. And you grow the most during these times. I can almost guarantee you that you learn more about yourself during a bear market than you do during a bull market. And you figure out different strategies, you learn different things, you understand a lot of different sort of macroeconomic and how that ties into the overall markets much better when times are tough. Okay? Because in this environment, you will see a lot of things that don't make sense and that are still playing out. And that's what the market is all about. It's like a consensus of everybody's thinking at the same time, right? Billions of people all around the world, and that number right here, the S&P, the NASDAQ, that's what that represents. So I won't be in the San Francisco area, unfortunately. I would have definitely, organized a meetup for sure, but I'm not visiting the West Coast this time around. I'm going to be mostly in the East Coast with a small trip to Colorado. But yeah, if I'm ever there, I'll definitely, and pretty much if you are in those areas, just let us know and we'll definitely organize like a meet and greet. Would love to get together. Obviously, it's always fun. It's always a good time. So we'll definitely do that. Leading up to the trip, I'll let you guys know, and we'll definitely do that. Okay, so Lauren says, I can confirm airline fares are crazy. So, all right, let's see here. Caddy, so much research and being so active in trading. I'm wondering how your ROI is so far. So long term, not so well, right? Long term portfolio is obviously destroyed. It's down closer to 25% on a year-to-date basis because it's more NASDAQ heavy stocks, more tech related stocks. Options portfolio obviously doing a lot better because of all the volatility we've seen, all the trading activity. So, that one, so again, this is a market environment where you have to be a little bit more of a trader than investors. So investors are going to be under a lot of pressure because of that longer term horizon, which, obviously if you're looking at companies from that 5-year, 10-year lens, which is what I mostly do look at, then these are great opportunities as well to be dollar cost averaging and to be a buyer at these discounted prices. But with that, you have to agree to that risk short term, which is stocks are falling and you are going to go through this entire bloodbath of portfolio being down. But as a trader, if you're swing trading, if you're day trading, or if you're trading options, this is like heaven for you, right? You're able to take advantage of that volatility and you're able to, play both sides, hedge your positions, whatnot, and still be able to make money, make profit during bad times. So, all right, perfect. When are you coming to sunny Florida? Not anytime soon, but we'll definitely make a plan for that as well. I've never been to Florida, so that's something that I definitely do want to visit. The one thing is that I really don't like hot weather. Like I hate like heat and hot weather. So I really do like cold places a lot more than hot weather. So Florida is definitely on the list. I know it's not as hot as over here in India, but it's not like a super priority as something like, the East Coast or even up north further. But anyway, let's take a look at some individual companies here. We got about 15 minutes left for the markets to open. We're going to switch over to our indices and we'll also talk about individual stocks in more detail when the market opens here. But yeah, 82% expecting the markets to be down today. So that's not surprising one bit because of, how bad inflation was. So go to Svalbard if you like cold. Yeah, I've heard about Svalbard up on the North Pole. And there's another YouTuber that I follow, and she lives, I think, in Svalbard. I believe that is the name of the place that has like 6 months of absolute darkness and 6 months of absolute sunshine. Like pretty crazy to think that you are living in such an environment where 6 months is going to be complete darkness. But yeah, I think that's one of the places that I do want to visit. Obviously not live there, but do want to visit there. Anyway, so what are you doing with LABU? So I sold covered calls on LABU as well. My cost base has actually come down pretty substantially. I think it's in like closer to like $9 or something for LABU. But I have sold covered calls, which are doing really well given the stock price is still dropping. So that's a great way to, again, lower your cost bases and at the same time generate some passive income. So I collected, I sold like 6 covered calls, or might have been 8, closer to 6 or 8. And those are obviously doing much better because of how poorly the stock is doing right now. So right now, obviously, biotech is still under pressure as technology is. So that gives us the opportunity to load up on the longer term time frame if you want to, and dollar cost average for them, or at the same time trade options if you want to hedge your positions there. So sometimes the moving averages are pulled in and sometimes they're not. I'm not sure why that might be happening. It might be because I have them turned off right now. So let me just turn them on. So I'll just save this chart. So maybe you can reload that now and that should fix that problem. Well, it's at 60 degrees Celsius. Oh my God. Like I'm dying over here at 50 degrees Celsius. I can't even imagine. There's no way. Kuwait's going to be the last place I want to visit, man. No offense, but yeah, that would be crazy. There's no way I'm ever going there. So rent increases really kill the core CPI. Not particularly true because, rent wasn't up that much. From about a month ago. So if you take a look at shelter prices here, shelter was only up 0.6%. So yes, you're right in a way that it makes up a third of core CPI, so 32%. That's a pretty big weighting on shelter, but it wasn't up to a point where that was like a crazy number. Right, 5.5% increase year over year. I think a lot of it has to do with transportation Airline fares specifically, transportation services, which makes up only 5.8%, was still up 1.3% for the month and 12.6% for airline fares specifically. But that was a big jump. And then we got used cars at 1.8%, new vehicles at 1%. And then of course, other utilities and energy and all that stuff was up quite a bit. Alex says, I'm in Vancouver and summer is not here yet. Yeah, Canada, I think Canada is a great place to be if you like cold and the snow. All right, so let's see. Let's just switch over to the indices here. And all right, so today I'm going to split it into 4 charts. We'll keep the S&P up top left. We'll keep the NASDAQ top right. And I'll keep the yields over here. Yields are something that we'll also monitor now on a more consistent basis. Look at that, up 1% now, 3.08%. So we're almost at 3.1 once again for the 10-year yields. And the Dow Jones here is going to be on the bottom right chart here. Yeah, so I think that's appropriate. 5-minute charts for everything, and we are ready to see how the market trades. Yeah, Chinese stocks are doing much better, Oscar. I agree. I think they're the ones that are definitely doing much better. Alibaba, Baidu, JD.com, they're all up 2+% today. So we'll see. I think earlier this week also, it was exactly 82%. People expected the markets to be red when we were down 1% pre-market, and then we ended up closing green. So you never know. In this market environment, you never know what might end up happening intraday. I mean, we've seen some pretty ridiculous intraday movements, north of 4 or 5% for the indices, let alone the stocks. Stocks have been making 10% intraday moves. So I don't think it's unlikely for us to expect a possibility where the markets do indeed close green if there's any buyers that do step in intraday. But of course, I think yesterday the markets got very defensive ahead of this inflation report. Yesterday's sell-off was just an anticipation of this inflation report, and once the numbers are out, nothing has really changed. But on an index level, the 2 levels that I want you to watch very carefully, the S&P, that's going to be a level at 3,800. We still haven't taken out that low. And that's a low from May 20th, right? So we saw a nice bear market rally of 9.6, close to 10%. And then the support at 3,800. That's going to be the most important level to watch here on the S&P. And then for the NASDAQ, this right here at 11,000. So if you come over to the monthly chart, that 11K is our make it or break it level. If the NASDAQ breaks below this 50 EMA on the monthly chart, you better believe it. There's a lot more pain to come, because that would be a big technical shift for the markets. So the bulls, 50 EMA right here, 11,000, that's the level, man. If that breaks this week, next month, whatever, we are in for some long. And again, I don't want to exaggerate, because the last time we broke down was back during the Great Recession and the dot-com bubble. Those are the last 2 times in the last 20 years it's broke down. Every single time it's validated. So that should tell you something about this technical support. So Mohammed, yes, thank you so much for mentioning that. Make sure that you also drop a like. Let's see if we can get up to at least 400 likes, 500 likes, because we do have a lot of people watching. So I appreciate you guys joining in this morning, and I'm happy to go over stocks for you, individual companies, but we'll take a look at the indices first, and then we'll talk about some individual stocks here. So make sure that you drop a like if you enjoy this live stream. Thank you. So given the fact that the Fed has lost control, it will happen for good. I think, now next week becomes even more tricky from a Federal Reserve standpoint, from monetary policy standpoint, because I mean, how do they solve this problem? I mean, it's pretty damn clear that energy is the issue. Energy is the big problem. But then how do you? It's not a monetary issue anymore. It's more of a political issue, right? I mean, how do you increase supply, right? How do you increase oil supply to a point where it gets more in sync with the demand and energy starts to come down? I think that's plain and simple, because the Fed now is in a very tough situation because it's a different type of inflation right now. Core CPI starting to come down 6% on a year-over-year basis. Even if they start raising rates, that's not going to do much for energy, right? If you look at the correlation between, let's say, interest rates going up, is that really going to stop energy prices from going up, right? Is that really what's going to happen? People still need to drive places. Companies still need to deliver goods. Energy is still required. It's a utility. You still need it. Interest rates go up because the Fed wants to stop discretionary spending, right? They want you to stop spending on things that you don't necessarily need, right? But things that you need, you're still going to spend regardless. People are still going to buy groceries. They're still going to buy gas. So they're in such a tough position that even if they do raise rates and they become more aggressive, there's no way to control energy supply. That's out of their control. And that's the big reason as to why inflation's pretty aggressively high or pretty elevated. So they're in a really tough spot. They're in a very, very tough spot here. Alex says need to push OPEC. Yeah, I mean, they've already raised their supply now to over 600,000 barrels per day, but I don't know, my oil economics is not very strong. My oil geography is also not very strong. I need to definitely read up and do more research on that. I'm going to be completely honest. But when it comes to refineries, when it comes to production, I'm not 100% sure as to what the US can do or even Europe can do to kind of keep up with that supply, keep up with that demand and kind of increase supply to a point where energy starts to stabilize a little bit and it makes it easier on the consumers. Again, like I said, I'm not 100% sure about those. I'm sure you've got plenty of people here that are much smarter on this oil topic than I am, and you can definitely chime in and help the community out as a whole and what your thoughts are. But yeah, this is from a monetary policy standpoint. I do think that the Fed, regardless of whether they do 25 basis points, 50 or 75, they can't put a dent on energy prices. That's out of their control because it's more of a supply issue. So, that, and then as a result, if they get into this illusion that, okay, inflation's high, they need to be more aggressive, and they start raising rates even more aggressively, and they go by 50, 75 basis points, then they risk actually causing a recession in a situation where the economy is already, or the consumer is already really weak with energy prices so high. So Nola says there are things that can be done, but they won't do them. This is a physical problem. Macintosh says this topic is a can of worms. I agree. I think this is a very polarizing topic, just like, political issues are and whatnot. So definitely, I agree. Anyway, so market's opening in about 4.5 minutes. We've got individual stocks still dropping. Amazon is aggressively down 2.5%. This is a stock that's more exposed to higher gas prices, higher oil energy prices than any other stock, any other tech stock for that matter, because of deliveries and so many trucks and freight and logistics that Amazon deals with. Tesla is also down 2.4%. I see this. For Tesla, I see this like one of the greatest opportunities. Like, this is where you get most consumers. This is the time for Tesla to get most consumers possibly they can if they play their cards right, if they're able to execute well. I think for EVs, this is like prime time for them. If gas prices are this high, this is where the consumer is going to be the most prone to making that change, making that transition away from gas-powered vehicles over to EVs, if it makes sense on a cost basis. So, this is just a really big opportunity. I think with oil, with energy prices at, what is it, a 4-year high, you know, you don't see that very often. It's a very big opportunity for a lot of EV companies. So for Amazon, what price is a buying target for you and for us? About $100, closer to $100 is a level that, you know, I find Amazon to be at fairly valued around those levels. But yes, electricity prices are also going up. That's a great point. But obviously gas is going up much faster than electricity. But you're right. Electricity price is also going up. So yeah, Tesla just holding on to 700 right now. So just over $700. Well, speaking of 700, we have exactly 700 people on the live stream. So thank you guys. Thank you for joining. And Amazon, like I said, down 3%. PayPal selling off even more aggressively now, down to $80, down 4.8%. Google is down 2. AMD holding pretty steady, holding very well. AMD is in fact now positive slightly. And Nvidia is still down close to 2.75%. Apple here down 1.68. And the yields getting closer to 3.1%. Volatility is up 5.7, 27.5. It's about to be a real volatile day today with VIX, yields, and the overall markets. Oh, there we go. We just crossed 3.1% for the yields. So Nidhi Shroff says, if I want to know more about oil futures worldwide, check Rita Sen's interview on CNBC earlier today with Becky. I will do that. I will definitely do that. Did inflation come out? Yes, Arnold. Inflation came out about an hour ago, and it's not what we wanted to hear, so let's just keep it that way. And yeah, it was definitely not the great numbers, but we know the reasons. We have been anticipating those reasons. YouTube is lying to us when you said 700, it was showing 650. Yeah, it kind of fluctuates for a point there. There was closer to 700. So yeah, it just fluctuates, you know, pretty aggressively. Could you see NASDAQ below 10,000? That would be catastrophic for the markets overall. I think for one, we'd be breaking down below this technical pattern, like the 50 EMA. I think a lot of traders and investors are watching that level, and that's one of the reasons last month the NASDAQ got down to 11,000 not once but twice. Twice we got down to that level and buyers stepped in. So technically, people are watching that level. Investors, traders, we're watching that level pretty aggressively. So it would be a big shift, technically speaking, for the NASDAQ. Can I see it happening? I mean, sure, it's a probable outcome. It's a possibility, but it's a very low probable outcome in my view. All right, off we go. The market's open. Dow opening down 500 points. Not a surprise. NASDAQ is, where is it? It's going to open any second here. There we go. Opening down 1.77%. And we got the S&P opening down 1.6% just at 3950. So 3950 was a number that we were expecting. And for the NASDAQ also at 11,500. And the yields still up to 3.1% here. And let's see. NVIDIA 2.5% down. AMD green. Look at that. AMD holding up very nicely. Tesla is getting pushed up. $710 is the high for the day. $711. We're only down 1.3%. Amazon also getting bought up slightly here pre-market. Meta platforms not so much. And Apple here is still down 1.6. Google is down 1.3. And PayPal here down over 4% at the moment. Energy, still, they're partying like there's no tomorrow. Energy stocks still up. Energy overall is up 56%. Oil is up 58%. And even gold, the gold trade hasn't worked out at all. We haven't really seen gold act as a hedge against inflation, at least not till now. Anything is possible over the next couple of years or a couple of decades here, but gold still hasn't moved at all over the last, I would say, year to date and over the last 1 year. But everything else, all sectors are pretty much down here. Intel is under 40. Let's take a look at Dow 30 names here, Dow 30 stocks. All right, so we've got everything red. All 30 stocks are down, including energy. Exxon is only down 22 basis points. That's the one that's holding up best, along with IBM, Walmart. Intel is just at $40. So it is the only stock that is slightly higher here. And then we've got Walgreens. You know, the biggest losers are going to be Boeing, American Express, Caterpillar, you know, Goldman Sachs, Honeywell, JP Morgan. They're all down. So entire energy sector here. Let's take a look. So energy sector, they're all down. Devon Energy, BP, Shell, Occidental. So Abhishek says, yep, when market opens, your feed lags because your trading view is eating up the bandwidth. That's a great point. I've always noticed that. As soon as the market opens, you know, I always get buffering issues. So that might be because of how we're getting the real-time data flow into TradingView, and I think it's eating up all of the data here. So I think that's a great point. But energy down. Let's take a look at cybersecurity. Cybersecurity is down anywhere between 2 to 4%. CrowdStrike down 4% today so far. Let's take a look at retailers. All retailers are down except for Kroger's. Well, Kroger's also just flat on the day, with Amazon leading the losses, down over 2.5%. And NASDAQ here, down 2%, 11,500. So we are seeing some acceleration in the overall selling for all three indices right now. Tesla is, all right, let's look at the Chinese stocks. I feel like that's the only sector that is green right now. So there we go. We got Li Auto up 3%, JD.com up 3.2%, XPeng's up 3.8%, Alibaba's up 2.5%, NIO's also up close to 1%, just under $19 a share. So Chinese stocks definitely doing a lot better. Fintech, all fintech stocks down. Affirm's down close to 8%, with PayPal down close to 4%. Square's down close to 3%. SoFi, Visa, MasterCard, they're all selling off here. And then let's take a look at some recovery stocks. So MGM, Boeing, Carnival Cruise, Delta, Norwegian, Royal Caribbean, Disney, American Airlines, Southwest, they're all down anywhere between 2 to 4%. To as much as 5%. So yeah, I mean, Chinese stocks are the only ones that are pushing higher, whereas every single sector, whether it's fintech, recoveries, cybersecurity, commodities, cryptos, energy stocks, so most of them, technology, they're all pretty much down on the day, pretty significantly. And DocuSign obviously down the most, is down over 25%. UVXY, with the volatility, that's up over 6%. But then we've got some Chinese stocks here, but everything else straight up down, starting with the most red. DocuSign, followed by Coinbase, LABU. We've got Unity Software, Mara, Datadog, Upstart's down 3%, down to $38. And then, of course, Shopify, Crowd, down 4%, 5% each. PayPal, Snapchat. And yeah, the fear is back. The fear is back in the markets. Yields are pushing up. Yield, of course, yield and energy. Those two things are putting more pressure on the markets than they need to. And yields are back over 3.1%. So, and Bitcoin down about 2.5%, and Ethereum is down over 4% right now. Okay, so let me know if the live stream has fixed the issue or if there's still a lag coming through. And the volume, yes, so Christopher says keep an eye out on the volume end of day. If it's high volume dumping, then we have a problem. So yeah, volume has been an issue in the markets recently. We've seen very, very low volumes for a lot of individual stocks. But we'll see if there's an increased volume today or next week so that we can at least take a look at some order flows, some capital flows to look at whether there's been any large or small orders. Michael, hi Caddy, what have I missed? Has the CPI come out yet? Yep. So, okay, still lagging. Okay. Not sure why. I think mostly because of what I think Christopher mentioned. Or was it Abhishek? Yeah, Abhishek mentioned about the bandwidth. It's crazy. I mean, you'd expect better performance from the M1 chip, but apparently not. It still lags as soon as the market opens. Okay, no lag, much better. But yes, Michael, the CPI report is out. It's, you know, you can already see how the market's pricing that in. Nasdaq's down 2%. So core CPI is at 6%. Total CPI is at 8.6. And month over month, it was up 1%. So those are the numbers, but it doesn't tell us the full story. I think the full story really has to do a lot with that divergence that I showed you guys, and energy that's pretty elevated, and it's out of Fed's control right now. I think even if they keep raising rates, all they're going to do is they're going to cut that discretionary spending and not the supply for energy. That's the bigger issue, which is, I don't think that's a monetary policy issue. Christopher says, my CRISPR is now printing 4,000. That's incredible. That's awesome. Congratulations. Right at resistance too, right? So, I mean, Christopher was hitting that resistance very nicely. And we're seeing a very nice small, big breakdown here, down 6.6%, getting tagged at that level and then coming right back down with the RSI MACD also selling off here on the day. So NASDAQ on the monthly chart, keep a close eye. We're approaching 11,100. We're approaching that 50 EMA once again. So I think it's time for us to do another poll, see where the expectations are. And yeah, this will be a big shift for the markets overall, if we do see. And then again, on the weekly chart, that's in line with the 200 SMA. All right, so 200 SMA sitting right at 10,780. So call it 10.7 to 11.1 between those two levels. DocuSign puts are up 400%. That's awesome. Congratulations. You guys are killing it. I love it. Yeah, DocuSign definitely having a very rough day. It's like the third big drop for DocuSign. Just can't catch a break. If you look at the daily chart, it's just had 3 really major gaps. But it's at support at $65. So, you'll look at the low for the day, 65.52. We've got our support at 65.44. So we certainly have some buyers stepping in here. That's the same exact level that we bounced off of on May 12th. So definitely do have, certainly do have had a very strong demand at those levels. So again, we got a lot of work to do intraday for the markets. Tesla is just at over 700. Amazon down close to 3%, so $112 around those levels. Meta's down 2%. Apple's down 2% to 139. Google's down 2%. And PayPal's down also 4%. So when you've got some of the large cap tech stocks, down 2%, 3%, there's no way the indices. There we go. DocuSign's getting bought up. Very simple trade plan on this one would be intraday. If you're looking at it, an entry here with a stop taking out the low from today, which would be below 65.50, and a profit potential, at least up to let's say $69, $70. That's going to be 4.4% return with a risk profile of roughly 2% intraday loss, right? So you're looking at 2-to-1 potential for a DocuSign intraday trade, and it's getting bought up here very nicely so far. DXY back up here, so up over 7.72%. So when dollar obviously goes up, it becomes more of a risk-off environment. When the dollar goes down, it becomes more of a risk-on environment. So the fact that dollar is going up, am I lagging again? Okay. Yeah, I don't know why that happens, man. It's crazy. All right, let me try shutting the tabs that I'm not looking at. So. But yeah, the dollar is up over 72 basis points today, back over 104. So we're seeing a little bit of a risk-off environment away from, technology and away from riskier assets over to some of the safer ones. But the yields are up 2%, 3.11%. So very, very, aggressive move to the upside for the 10-year yields. All right, so I think it's best that we call it here. It has been a very long live stream going over inflation numbers. There's, we've talked about a lot of things, but I'm going to jump over to our Discord. I think I will be more useful there, looking at some trade ideas, going over some, buy and sell alerts and options trades. So we'll take a look at that, and then we'll wrap it up here. The market's overall, still down on inflation numbers. So we got the Nasdaq down 2%, Dow is down over 1.7, and the S&P is also down close to 2%, with a lot of individual stocks also dropping pretty aggressively, with the 10-year yields pushing up close to 3%, up back over 3.1%, and the volatility here is up over 6.5%, back over 27, close to 28 levels right now. So once again, thank you so much for joining, everyone. I really appreciate it. Make sure that you drop a like, and of course subscribe if you're new to the channel. And of course, link's going to be down in the description for our Discord and our Patreon if you want to join, get access to all the private videos, tutorials on fundamental technical analysis and options trading as well, and our buy and sell alerts and options ideas, trade alerts, all that stuff. So thank you so much. Have a great weekend, and I will see you guys first thing Monday morning for our live stream. Other updates will be posted as usual over the weekend. So hope you guys have a great day, and I'll see you guys